Serving all of San Diego, this is your Fox 5 News.
Millions of Americans remain unemployed this tax season. So how can they make sure to get all the appropriate deductions? Stuff is so confusing, this taxes stuff. So joining us this morning, tax expert Ronson Shamoun. Good morning, Ronson. Good to see you.
Good morning. How are you?
I'm doing really well. Okay, makes sense for all this. We're going to talk about those that are unemployed or recently just went back to work. For those people, when should they be filing their tax returns?
Well, the earlier you file your return, if you're entitled to a refund, you'd get it in about 2 weeks. So if you need the money and you're not going to owe any tax, I would file immediately so you could get that money and have it start working for you right away.
Okay, so how do you detail all your taxable income and your unemployment? A lot of people are getting unemployment benefits. How do you do that?
Well, unemployment benefits are taxable. A lot of people don't know that. So if you did receive any unemployment benefits, those are taxable, so you should file your return. Also, job severance payments. A lot of people who lost their jobs were given a severance. Those are taxable as well. In addition, cancellation of debt. A lot of people defaulted on their credit card payments, couldn't pay some of their bills, and had some cancellation of debt. That is also taxable to you.
Okay, what about a foreclosure? Does that also apply?
Well, luckily, they passed legislation in Congress where if you lost your home to a foreclosure and it's your primary residence, there is no tax on that. Let's say you lost the home and there was some forgiveness of debt. There is no tax on that amount of money. So you don't have to worry about that if you lost your home. But you should file your return. Otherwise, the government doesn't know that you're entitled to that exception. So you should file, report the house was in foreclosure, and you won't have to pay any tax.
Okay, I'm sure a lot of people may have tapped into retirement funds to be able to, get some funds out. How does that work with tax deductions, rather?
Well, currently, right now, if you take an early withdrawal, if you're below 59.5 years old, there's a 10% penalty. However, if you had to withdraw from your retirement account, let's say you needed to pay your health insurance benefits, premiums, medical expenses, or even a down payment for a home, you could withdraw from your retirement account and not pay a penalty for that early withdrawal. So it could kind of help you get yourself back on your feet or cover those, health expenses that you may have.
What if you were searching for a job? Is there anything you could deduct for that?
Yeah, all the expenses related to a job search are deductible, they are deductible. However, there are some limitations to it. It has to be in the same similar field that you were in currently, and there cannot be too much of a lapse of time between your former job and your new job.
Okay, well, what if you got the job? Can you deduct anything now that you're working?
Yes, you can. If you moved more than 50 miles away from your job and you're going to stay there for a certain period of time, you could deduct all your moving expenses.
Okay, and then also for health insurance deductions, can you do that if you're unemployed?
Well, currently, the people who have lost their jobs are paying their health insurance premiums through COBRA payments. Those are not normally deductible on your Schedule A. However, if you are paying those COBRA payments after you lost your job, you can deduct those expenses this year.
All right, Ronson, it's good to see you. If you would like to get in contact with him, his law offices, they're in downtown San Diego on 9th Avenue. The number's right there, 619-595-1655. We also have all of the information to get in touch with them up on our website, fox5sandiego.com. Click the Scene On tab. Good to see you, Ronson.
Thank you. Good to see you as well.
All right, Raul, we'll send it over to you.
Good information, Shali. Thank you very much.